Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at the CFDs on crude oil for WTI, West Texas Intermediate, and updating our Elliott wave count and also looking at some basic technical analysis. Now we're here on the 2-hour chart. And we can see everything from the wave 4 correction here, which I have as a double zigzag, A, B, C, W, X, A, B, C, Y. And then we have this price action up to the recent high where we've stalled. We've been consolidating since. We've either completed a small free wave pullback and are now impulsing higher, or we've completed the first move of a greater free wave move into what I'm saying is an intermediate wave 2. Now, it's not the cleanest move up here by any stretch of the imagination. This first rush up here doesn't seem to have any typical impulsive structure that we would like to see. It doesn't work as a diagonal either. So I think we just have to assume an extremely small wave 2 pullback in here somewhere, and then a 3-4 up here maybe. And then a push up into the, or even maybe this could be 3, 3, 5, and the 1 should be here, and the 2 should be here. Either way, this first move is a bit problematic. It's not exactly clear. From there, we seem to just go into an extension for a wave 3. We get a longer wave 3. So we get a 1, 2, 3, 4, 5 waves here at a smaller degree into the minor 3. Before you say anything, there is no overlap here. I've checked, I've zoomed in, I've put a line right on the very top of the wave 1, and we just come within a gnat's cock of it, but we don't actually overlap, so it is a legitimate wave 3, and this 3 at minute degree is longer than the 1, and this 3 at minor degree is longer than the 1. So we are impulsive and not breaking any rules. Now the final move up appears to be a ending diagonal where we have a zigzag move here, zigzag move here, zigzag move here, zigzag move here, or I mean sorry, here, and then a zigzag move here into the 5. Not great. It's a bit tricky really, because this should be a contracting pattern, right? Because the 1 is longer than the 3 and the 3 is longer than the 5. Okay, but we don't get that typical wedge pattern. Can't call it an expanding pattern because the 3 would have to be a little longer than the 1 and the 5 would have to be longer than the 3. So I don't really know what to do with this up here other than just label it as some kind of diagonal for the moment. It could be some kind of corrective move where we have a 3-wave move here, 3-wave move here, and then you'd expect to see a 5-wave move here, but we don't get it. We get another 3-wave move. So I think we do conclude up here in something, whether it's a wave 1 or whether it's a primary wave 5, and we're now bearish and going to have a much larger correction. The initial move down doesn't look impulsive to me though. This looks like a 3-wave move, this looks like a 3-wave move, this looks like a 3-wave move, this looks like a 3-wave move. So everything here looks like 3-wave move. It looks corrective. So in that premise, I'm thinking 3 to here, 3 expanding pattern to here with 5 waves in the C, 1, 2, 3, 4, 5. So let's just label that at smaller degrees. So we say A, B, 5 in the C to here, and that gets us to our B. And then now we should have 5 waves down in a C. Okay, so this has come to more than 90% retracement of the A, so this is a regular flat pattern we're looking at here. So we would expect to see if this is a 1, 2, 3, 4, that doesn't look enough, so maybe that's a 1. That would be 2, 3, 4, 5 down into a C. 3 would be a bit longer, 5 would be a bit shorter perhaps, and that would complete the 2. We get a larger 1, 2 correction, and this would be A, B, C, regular flat. So we'll just get rid of that. That's about the best I can make of it at the moment. Okay, so if we just zoom out to get a look at the bigger picture for a moment, and just remind ourselves what we're looking at here. Oops, a daisy. We've got from 0 essentially, because this is CFDs we're looking at. We're not looking at the minus pricing of the futures, and we're not looking at the index pricing either, which was somewhere around $7. So we're starting at 0 and using the CFD chart here. So we come to 1, 2, 3, 4. Is this 5? Okay, question mark. Is this 5 or is this 1, 2, 3, 4, 5? Okay, so that's the only real thing that matters at the moment. Now I'm leaning towards the idea of 5 being higher up. The reason is, so far, like I said, I don't see an impulsive move down off of a high. If this was a completed 5th wave, I would expect to see a nice 5 wave move down, 3 wave pull back, and then that would be, you know, the first 1, 2, 3, 4, 5 A, B, C, B, 1, 2, 3, 4, 5 C, or maybe just A, B, C in a much shallower correction. But I'm going to lead on the idea of this being an intermediate 1 into a 2, and we're pushing higher in a 3. The expanding idea I had a while ago, which was the idea that this was A, we've come up into a B, and now we would come down into a C. This is also negated, or, well, not negated, but severely undermined by the lack of impulsive action from the high. If we had 3, 3, we should have 5 coming down in the C. We don't seem to have that 5, 3, 1, 2 at all. So for the moment, I've had to discount that because I just don't see an impulsive move down off a high. So I still think we're in some kind of corrective move. There is the option, if we come back down to the 2 hour for a moment, there is the option that we're done here, A, B, C, and this is 1 and this is 2 already done down here, and now we've gone 1, 2, 3, 4, 5, 1 on a smaller time frame, and this will be A, B, C into a 2 on a smaller time frame before pushing up in the 3. Possible, but I'm looking at this move down now, and I'm thinking it doesn't look like a 3 wave move correcting a 5 wave move, so it feels more like this is 3 to here, 3 to here, with 5 in the C, and then now 5 to come down here in a bigger C. Could be wrong though. Either way, I still think we're either completed the 2 here at intermediate degree, or we've just got a little lower to go. Either way, I think we're only really getting started in the 5th wave. I think we've got further to go. If we were to break down violently from here, then there's the possibility, right, that what we're actually looking at is, instead of this being a completed 1, a completed 5, there's also the possibility that this is 3, this 3 over here is actually here, and we've gone A, B, C into 4, right, and then we've gone 1, 2, 3, 4 into a truncated 5th, right, which is ever so slightly below this 5, and now this is an impulse wave down into a 1, 3 back into a 2. Okay, so there is a bearish possibility, so we'll clear the chart in a minute and we'll put that alternative idea of a top being in place with a double top. You know, we've got a double top here, you know, 3, 4, 5 as a double top, although it's definitely an alternate. So tell you what, let's just do that now then. Switch off the ball count for a moment. I just need to add this into it. We've literally added it onto the chart. Okay, get rid of this. I'm just going to slap on this last little bit here as an alternate. So if this is the 1, 2, 3, 4, we could still call this the 1, 2, and then 1, 2, 1, 2, or 1, 2, 3, 4, 5, 3, 4, 5. So 3, 4, very small and unusual 5, finishing in a truncation. So I would just type that up here. I don't think this is particularly likely. It's just another way of interpreting the current price action. Mainly because of this little 5 wave move up with that we've had here. 1, 2, 3, 4, 5. This could be a C, or it could be a completed impulse into a 5, or it could be a start of a 1, 2 of a smaller time frame. Makes everything a little complicated, because until we see the high here get taken out, we could say, alright, 1, 2, off we go in the 3 if that high gets taken out. If we see this low get taken out, then this was the C of 5 waves, and this is a larger C down. Okay, so we will have confirmation sooner or later, but for the meantime, this is a possibility that we've truncated up here. Alright, and I'm just going to save that. It's only 2 little things, but it's just there to remind me. So that would be market top, wouldn't it? We're saying the idea that we topped in a 5th. Okay, well, let's just bring back the ball count. So for the meantime, my preference, given all of these options, the completed primary 5 up there is an option, the completed 1, 2 here, and this is an impulse 1, 2 as an option. And then finally, my preference, which is this is 3, this is 3, this will be 5, into a 2, slightly deeper, and then we move higher, assuming that we've completed in that wave 1. So if we just throw up a fib, from below for the moment. We'll just change our settings here. Right, so looking for 50%, around 50%. So we could have a significant pullback here to get a wave 2. If we just throw up the 38.2 as well, it could be quite bullish. One of the things we have to bear in mind is that in commodities markets, sometimes we get extensions in wave 5s rather than in wave 3s. So the idea of reaching a significantly higher target for a wave 5 with a long one is, I think, more believable in this case than it would be if we were looking at potentially, like if we were looking at equities or something. So in that case, I still favour this idea of quite a long intermediate 1 to going to have a long intermediate 3 for a barrel throughout the next year or so. That's my preference at the moment. We'll wait to see if this low gets broken or if this high gets broken. That will help confirm what we're doing in the short term at least. Alright, so that's the Elliott wave count. Let's switch that off now. We'll just add this into the bullish count as well so I know what it's related to. Switch that whole thing off. That's the text there. Let's come out to the weekly time frame. Bring up our indicators. And zoom in the chart a little bit. Can we switch those targets off? Did I put those in their own folder? Let's do that now. Say wave 5 target. Okay. And then bring up our moving averages. We've got a 10 in yellow, 20 in blue, 60 in orange, 250 in green. Then we've got our MACD here set with a 10 for the average, 20 for the signal in blue and orange respectively, with a little red and green histogram here. And then we've got an RSI set to a 10 close with a green 30 level representing oversold and the red 70 level representing overbought. That's just keeping an eye on that divergence. Let's close the window here. Now for some reason, can we get volume on this? I can never remember. Yes we can. And I don't know why, but my volume profile has gone missing as well. So down here, visible range. Okay. Right, so doing some basic technical analysis for a minute. Out here on the weekly time frame, we can see we're above the 10 exponential weekly moving average, having tested it with this initial 3-wave move down. Okay, tested it to the tick. Here with a nice long wick, not quite long enough to be called a hammer, I don't think. This is a pretty concerning candlestick in the meantime. Long wick to the upside. Is it a doji candle here? I mean, if it was this candle here, and it was a higher, and the peak of the wick was a higher high, we'd probably call that a shooting star here. But because of the sequence it's occurred in, we really do need to see the close of this week before deciding what this candle is. We may get a full body back up to the top before the end of the week. If this was a completed 3-wave move, this could be a move higher. So we'll see. If we gobble up all of the previous week's candle, we get a big bearish engulfing candle down here. We'll see. But above the 10, above the 20, above the 60, above the 250, some pretty strong. Okay, not relative to the collapse during 2020, obviously. But if we just zoom into the more recent activity, we can see, you know, this recent rally was supported by volume into the high, and we've had some pretty heavy bearish selling, bearish volume come in here, some selling volume come in at the top. All right, but relative to this collapse back here, it really is, volume is still very low relative to even during this corrective period here, volume is still very low, well above the point of control here in the visible range. Now on the MACD, we've got, I'm not sure if it's a, yeah, it is a 3-way a 3-peak divergence here, 2 successive peaks of divergence. So we are approaching some kind of top. I mean, we've got this high, this high, this high, 3 higher highs, and then we've got high, lower high here on the MACD. We've got the same thing here in the RSI. Now that is, considering these are all overbought conditions, right, very little corrective move out of overbought here in this 3 of a 3, right? That's where momentum was at its peak, the third of the third here, supported in the MACD, supported in the RSI, very little correction. Once we complete the larger wave 3, in our assumption here. We get a lower reading in both MACD and RSI. We come down further. We don't quite make it to oversold though. So this could be your classic 3, 4, 5 divergence, where the 3 diverges from the 5 in momentum, the 5 makes a higher high on a lower volume, and less momentum before rolling over. So from a basic technical analysis point of view, there does appear to be evidence to suggest that this could be a major top. Okay, could be. I haven't seen an impulse from the high yet. If we get a significant breakdown here, and we see momentum really take a swing to the downside, and we see volume come in to support the selling, we can start to become more suspicious, or more bearish overall. But for the meantime, I don't see a clean impulse off of the high here, but we do have a long-term divergence to deal with. Let's come into the daily time frame and see how this looks. Yeah, I mean, we can see here that this recent... What's interesting is that this rally here, right, was mainly done on declining volume. Okay, we peaked around the selling. Now this final move up actually had support from volume, which is more, in my opinion, which is more synonymous with the beginning of a move rather than... Well, I don't know. I'm just thinking now. Actually, is that BS to interpret that? Volume's just so low comparative to what it was prior to March 2020, April 2020. Then maybe I'm just reading too much into that over the short term, and really we've got to keep in perspective what that increase in volume represents overall, which is minimal. So, still got that. We do not have a twin peak divergence here on the MACD over the shorter time frame, so we can see here that we've actually come up and made a higher high in the MACD with a recent move higher. Interesting. RSI, I think that's also true. Yes, it is. We just eked out another high above this high, so we don't have that same divergence here on the daily time frame as we do on the weekly time frame. So yeah, like I said, in the meantime, this still, to me, this still looks like a free wave move. I can't sell myself that this is an impulse. If this was a clear 5-wave move down off of the high, 3-wave back, I'd be like, yeah, more likely that this is the market top. But this looks like 3. Okay, so this is either 1, 2, and we're going higher, or it's going to be 3, 3, 5, and then we're going to go higher. I'm going to lean on the side of the bullish scenario for the moment. I think the increase in the RSI to a higher high in the peak here from oversold conditions, the same from below the zero bound here on the MACD back to higher levels of momentum above this peak here. Also sell me on the daytime frame that we are still bullish. So whether we could spend another week or so correcting in a 5 waves down to complete a C, I still think over the long term we can expect higher pricing in oil. I think the fundamentals are in place to support higher energy costs going forward as well. I know a lot of people have been saying it's just supply chain issues and it will sort itself out, but those supply chain issues, I remember listening to the predictions at the time when the Fed were talking about transitory inflation. It was like a month or two it'll clear up, then it was a quarter, then it was a couple of quarters, now it's a year, now it's more than a year. So it sounds and smells like bullshit to me. Okay, so you can't keep saying we're dealing with the small time frame and things will sort themselves out, to suddenly extending it to months and months, quarters and quarters, and eventually years. If you keep extending it, you've got to accept that it's more than a supply issue, I think, because the same excuse is being massively undermined by you moving the goalpost so much. So in that sense, I think that, yeah, higher energy costs, higher oil pricing is probably just going to be the onward going theme as we move forward in time. Alright then, guys, I will leave it there. Thank you for joining me on this technical analysis of the WTI oil market. If you're new to the channel and you like what you're seeing, please subscribe, smash the like button, leave us a comment in the comment section below if you want to, hit the little bell notification icon to remain informed of future video releases. Also, as always, a big thank you to my patrons. Your support is greatly appreciated. If you're interested in joining the Patreon and getting access to the Discord and all the other benefits that come along with it, there's a link in the description below. Go over and have a read of the tiers, see if there's anything you're interested in. Also, if you're not following me on Twitter yet, there's a link also to my Twitter feed in the description below. Alright guys, take care, and I will likely be back with you next week now. I've got my Patreon exclusive to do for the week, and then I think I will hit you guys up on Monday. Right, take care, bye bye.